Good evening, everyone. Welcome to the Lock in Your Success Trade and Market Update for June 30th, 2013. Before we get going, we would like to remind you that any information contained in the presentation is for educational purposes only, and we are not broker-dealers or financial advisors, and therefore we are not making specific trade recommendations. Any trades and or results covered in the presentation may or may not be live trades. In the event that anything is computer simulated, we do the best possible to make sure that everything is accurately represented. And also the risk of trading loss in securities, options, futures, and forex can be substantial, so please be aware of all your risk factors prior to placing any trades. And make sure you read the characteristics and risks of standardized options documentation available at your broker. If you're watching this on YouTube, please be sure to visit our trading blog and see all the neat things we have over there. And be sure to check out our ROCK M3 and Bearish Butterfly series. And thank you for all the great comments from you guys who've already bought them. All right, let's take a look at the markets. More or less as expected on last Sunday night, we expected the Russell to stay or range between 950 and our 1010 range that we've had going on here for quite some time now. We did have an intraday penetration here, which is fairly normal at a support level, and we had a support level, a horizontal, we had a trend line support, and we had our reversal here. So as has been happening, every time we hit some sort of a fairly significant support level, we get a fairly aggressive bounce, and we did a bounce from around the 945 level to the 977 level in only a few days. So it's a pretty aggressive short-term move, although it shouldn't have been overly unexpected. One of the things you'll notice is this pattern here is very similar to the last time we consolidated sideways, and more or less the last time we came near this trend line we had quite a launch. Don't know that we're going to get that this time or not. However, I still am expecting the market going forward to stay in between the 1010 and more than likely this uptrend line here. Until the market proves us wrong, we're going to remain bullish on the markets. In the longer term, more sideways in the shorter term. This is a fairly significant short-term level here. If we end up popping this level, we're probably coming back to at least the 1,000 area. We do have significant resistance here, but we do have some tails up over that area, so it's very possible we could even penetrate this 1010 slightly and then reverse like we did down here. If we continue to widen out, that would mean we're kind of going into what we call a broadening pattern, and we'll have to see when we break out of that. But for right now, we are continuing our sideways opinion until something technically changes for us. If we come into the NDX, all else we did is we reset and came down to our primary trend line here, and we had a bounce. Nothing overly unusual about that. If we look at the SPX, same thing. We came into our more major support level here, which wasn't a surprise. We had a slight penetration, but all that did is bring us down and set a new channel here for our continued uptrend. So we come down, and this is what I do technically with my channels. All right, most likely when we break this trend channel, we're going to come back up, touch the back side of the trend channel, and unless we have an actual market reversal, we're expected to continue to trade in this channel going forward. One of the things I'm starting to do is project our expiration prices, and for right now we're looking at around 1675 for the SPX, and we're looking up somewhere in the 3050 range for the NDX. We're looking somewhere up in the 1050 range for the Russell. And of course, all of that's subject to change if we get something that technically changes in the charts. But assuming everything stays the same, those are our numbers that we're looking for August expiration. If we come out to the Dow, we kind of set I just started and drew in a new trend line here. We'll see if this area holds. But yeah, we came down to this whole support area. I wouldn't be surprised to see the Dow break down to 1440 if it decides it wants to become weak. But as for now, it's held this level, and we are expecting it to continue to hold this trend line more than likely. All right, let's take a look at our trades. Actually, before we do that, let's just quickly go to the Russell short-term charts. And one of the charts I really like to look at is our 60-day charts. The hourlies can tell you a lot that you don't see in the longer-term charts sometimes. So here we had our gap down. We came here, we had our flush out, had our very aggressive buying up to our support area. Now, technically speaking, a support area for a window is the whole window. It's not necessarily the bottom. Sometimes you bounce at the bottom, sometimes you bounce at the top, sometimes you reverse in the middle. As of right now, we came up pretty much to the center of our window. So we're in a resistance area, and you really can't say we've cleared this area until we're up into the 987 to 990 level. So as of right now, we're in a resistance area. We shall see where it goes from here, and that's going to tell us something with the markets. Right now, we're in a state of I don't know. We have to see if this area, how this window, how trading reacts to this window during the week. If we break down from it, then we're looking on our longer term charts for our trend line area to hold here. And of course, if that fails, we're looking for support around the 950 level, or more specifically, now that we've set a lower low, the bottom of this candle, probably 940 area, which also coincides with the bottom of another gap. So if you look here from a horizontal short-term perspective, it makes perfect sense that the market reversed right here. We came into this window, reversed hard and went up. Of course, we had daily issues going on too. Like I said, we had daily trend lines that were a bit higher, which is another reason. However, it was interesting that it returned there. Anyway, depending on which way we break here, if we break up, that would be pretty bullish. If we break down to here, we're still bullish. If we break under here, then things are starting to change a little bit. So that's where we stand now. Okay, here's our trades, and we will go over the simple things first. There were multiple adjustments in a couple of trades, but most of the trades didn't really get anything. Our V condor here for August is sitting in exactly the same position. We'll show you the position. This is our put side. This is our call side here, with our long at 950, and our shorts up at 1050, and we have more shorts up at longs up at 1080. We have our short puts at 860, and our long puts are going to be down at 890. We are minus 70 delta. We're up about $900. This is what the trade looks like right here. If we come back down to one line, you can see that if we continue up, we're going to have to start buying back the calls here to flatten our delta when we get up over minus 100. Until then, we really don't do anything unless we start to swing back into here, in which case we're going to want to start to raise our expiration graph up. If we continue in our sideways move and stay under 1010 and we don't get there too quickly, then we may not have to do anything, and we can get up into this range here. You can see as time goes by how this kind of explodes to the upside, our profit and loss with time. So this trade does like the trending up markets. If we look at our V condor for July, there were no adjustments to this either. We're just kind of sitting here. We're up about $2,900. If we take a look at our analyzed graph, you can see we're at our expiration line for profit and loss here. Basically, if the market sits here, we will widen this out. I probably should have done it last week, but I was definitely concerned that we may get some sort of an aggressive down move, so I left it alone. If we'll see if this resolves itself or if it continues here. If it continues here another couple days, I'll probably widen out a little bit more, bring a little bit more money in the trade. This is likely to expire at like a $3,500 profit or so. So that is the V condor for July. If we come up to our July rock trade, this did get a few adjustments this week. If we come back to Monday, this is what the position looked like here. If you remember, we did put the rock on as an M3 because our volatility was elevated. However, in this specific case, so far, it would have been better off if we did enter as a rock trade, but our guidelines told us to come to an M3, so that's what we did. And during the week, what we did here is on Thursday, we bought sold five 950, 960 put verticals. And on Friday, we sold five 960, 970 put verticals in the morning when the market was cranking up. It wasn't necessary to do it in the morning. We would have been better off doing it in the afternoon because the market came back down, or possibly not doing it at all. We shall see. But this is where we end up. So on Monday, the position was 10 long 890s, 10 short 940s, 5 short 950s, 5 short 960s, and 10 long 990s with 1 long 910 call. If we come to Friday, we no longer have the 950 shorts. We're 5 less 940s, and we brought those up to 960 and 970. Our current position looks like this, and we're gaining money, and this looks perfectly fine. If we come up to the August bearish butterfly trade, this trade here got no adjustments. It's currently down about $1,500. We do have a delta theta ratio problems. We are over our add point of 980, but just barely. And I believe this was the first day we actually closed over 980. Again, this is due for an adjustment. And because we did have a delta theta ratio problem, and I believe we were having that before we were over 980, technically the proper move to do here is to roll my 940 to 960 and add some 980s. As of right now, we'll see what happens on Monday. If Monday's an up day, I'll do the roll, I'll add at the 980s, and we will run the trade from there. If Monday's a significant down day, I'll leave it alone. This is what the position currently looks like here, and all is doing well with this trade. Let's take a look at the June bearish butterfly. I mean the July bearish butterfly. If we remember, we were simply in 1/3. We've just sat here and done absolutely nothing to this trade all month. The position is up 2/3 of our 30% profit target, or 20%. We only have, about $13,000 in the trade, so as far as invested capital, it is up around 65–70% here. So where do we go from here? We were 21 days from expiration on Friday. The guidelines do call for the beginners to pop out when you're 21 days to expiration and you're up for more than $5,000. I have decided to hold this and trade it closer to expiration. I'm going to at least go into expiration guidelines. However, because I only have 1/3 on, I'm not going to let this go to -250 delta. I'm going to start doing something at around 150 or so, and we'll start scaling in to the position here. See if we can bring this up to our 20%. I'm sorry, up to around our 30, or maybe even higher for a percentage return here. See if we can take home a really nice profit this month. Okay, let's go to our July M3, which is the last trade we have on. July M3 is the one that saw the most action here, and one of the reasons is I'm just keeping the delta really flat here, really staying on top of things. Maybe a little too much so, because I am getting chopped back and forth a little bit in the markets. However, we've had some decent market moves. So if you look at our charts, we have withstanded a move all the way from 1,000 here down to almost 940, which is like a 60-point move, and now we're back up to almost 980 again, which is another 40-point move very quickly. And we are coming into expiration. So trying to keep a flat delta, you are going to get kicked around a little bit, and we are. However, the trade is doing perfectly fine. During the week here, on Tuesday, I sold 2 960, 970 put verticals. On Wednesday, I sold 3 960, 970 put verticals. On Thursday, I sold 2 960, 980 put verticals, sold 3 970, 980 put verticals, and on Friday, I sold 3 970, 980 put verticals to put us into this position here. We are currently very flat delta. We're up about $2,500, and our T+0 line is nice and flat. If the market comes down really hard, then we may get hurt on this. Other than that, it should be a good month here. And if you want to take a look at our T-log, I can show you that. You can see the move on Tuesday. The move on Wednesday is here. The moves on Thursday, I did these in 2 different moves. I did the 960, 980s, and then we did the 970, 980s. And then on Friday, we did 3 more of these 970, 980s. And that is all I have for now. So we're expecting continued sideways movement in the market, albeit very choppy. And we may get kicked around a little bit in our positions. But everything's doing really well for July, and I'm really excited to see what August is going to bring. All right, we'll keep you updated when it changes. Thank you, and good night.